ERC 4804 allows Internet users to access Ethereum applications and NFTs without worrying about centralized censorship via Web3 URLs. This is a new standard which interacts with the Ethereum virtual machine. It is the first of its kind for the blockchain. It provides dynamic data interaction, as well as allowing for easier interaction with other blockchains. This new Ethereum standard, ERC 4804, provides Internet users with the ability to access Ethereum applications and NFTs without the worry of centralized censorship. This is a major step forward for the blockchain ecosystem, as it allows for users to access websites and content stored on Ethereum directly, rather than through a centralized service. It also opens up opportunities for applications which are at risk of censorship, such as Tornado Cash. While the cost of on-chain storage is still prohibitive, the potential for dynamic data is a major advantage compared to other decentralized hosting solutions. Cathie would highlighted that the recent instability of the banking system led to a surge in the prices of major cryptocurrencies, Bitcoin and Ethereum. This surge caused a threat to several stablecoins. She believes that the regulators should focus on the weak points of the traditional banking system. It has been showing signs of crisis similar to that of the 1920s. Twitter CEO Elon Musk commented on the situation, pointing out its similarity to 1929. This article highlights the instability of the US banking system recently, which has caused the price of major cryptocurrencies to surge. Cathie Wood, CEO of ARK Invest, noted that the banking system seized up while the two major cryptos, Bitcoin and Ethereum, took advantage of that and didn't skip a beat. Woods then commented on the situation with regulators, believing that they should have dealt with the weak points in the traditional banking system rather than attacking decentralized, transparent and well-functioning financial platforms. Twitter chief Elon Musk then weighed in on the situation, agreeing that it was similar to 1929. Finally, the article discussed the three crypto-friendly banks that failed and the impact that it had on Ripple and other stable coins. Hut 8 Mining and Marathon Digital Holdings are two publicly listed Bitcoin miners. They have given in to the prolonged bear market and started selling their Bitcoin holdings to fund operations, despite the rising costs of holding onto the coins. Other miners have followed their lead. They have experienced large non-cash impairment losses and taken losses on mining equipment due to the decrease in Bitcoin prices. Going forward, miners are expected to stick to a hybrid strategy of selling and holding Bitcoin, until the market conditions improve. This article provides a comprehensive overview of the current state of the Bitcoin mining industry. It explains how miners have had difficulty raising funds for operations due to the bear market and narrowing margins, and how some have resorted to selling their mined Bitcoin to pay for daily operating expenses. It also discusses the implications of this trend and how miners can maximize the benefits by timing their sales correctly. Additionally, it highlights the non-cash impairments that many miners have reported in their earnings and the potential for miners to pursue a hybrid strategy until the bull market returns. Overall, this article offers an informative look at the current state of the Bitcoin mining industry and the challenges it is facing. John Deaton, a pro-crypto lawyer and legal expert, has suggested that the New York Attorney General may be targeting Ethereum. He believes they are staking in an effort to eventually shut down all similar projects. He claims that this action is not coincidental. He cites an excerpt from a case which suggests that ETH holders can make a profit by participating in staking the token. Deaton also mentions a previous class action lawsuit against Ripple. This lawsuit represented XRP holders and incorporated their testimony into the main case. This article provides an interesting insight into the legal perspective of the ongoing SEC case against Ripple and the implications it may have on other crypto projects. Through John Deaton's comments, it is clear that there is a concerted effort from regulators to target Ethereum and other crypto projects in order to eventually shut them down. His statement that Ethereum holders can make a profit merely by participating in staking the token serves as a reminder of the value of blockchain-based tokens. The article also outlines a class action lawsuit organized by a lawyer that involved more than 75,000 complainants, which demonstrates the power of the crypto community and their commitment to protecting their interests. Robert Kiyosaki, the author of Rich Dad Poor Dad, has made another prediction of an upcoming economic and financial collapse. He is recommending to his followers to invest in Bitcoin, gold and silver as a hedge against inflation. Overall, Robert Kiyosaki has again predicted an upcoming economic and financial collapse with the potential for Bitcoin, gold and silver to serve as hedges against the downturn. He has also drawn attention to the recent collapse of 3 major banks, which have been crypto-friendly in the past. Bitcoin funds have seen a decrease in coins held this month, dropping to a 17-month low. This comes even as the Federal Reserve is expected to pivot in favor of liquidity easing. Additionally, bankrupt cryptocurrency exchange FTX transferred $2.2 billion to its founder and other key employees. Lastly, SEC Chairman Gary Gensler believes tokens underpinned by a proof-of-stake consensus mechanism may be subject to securities laws. This article discusses a range of topics related to the cryptocurrency market, including the decline of coins held by close-ended funds, the transfer of $2.2 billion to founder Sam Bankman-Fried from a bankrupt cryptocurrency exchange, and the opinion of U.S. Securities and Exchange Commission Chairman Gary Gensler that proof-of-stake tokens could meet the definition of securities under the Howey test. These developments demonstrate the current trends in the cryptocurrency market and the potential implications of SEC regulations. Ethereum developers have set April 12, 2023 as the target date for the Shanghai hard fork. This is the completion of the network's transition to a proof-of-stake network and will enable staked ETH withdrawals. Validators have had their funds locked up since the POS beacon chain went live in December 2020. They will finally be able to access their stake on or around April 12. Developers have conducted numerous tests since the merge to ensure staked ETH withdrawals will function properly. They are confident that the same issue experienced on the Goerli testnet won't happen on the mainnet. This article provides an update on the long-awaited Shanghai hard fork that is set to take place on April 12, 2023. This upgrade, referred to as Shapella, will mark the completion of Ethereum's transition to a proof-of-stake network, and will enable staked ETH withdrawals. The fork has been delayed from the developer's initial target for March 2023, and validators have had their funds locked up since December 2020. Ethereum developers have been running numerous tests to ensure that staked ETH withdrawals would function properly, and the latest testnet hard fork on Goerli experienced low participation rates. Finally, validators will be able to decide what they would like to do with their stake after April 12. SEC head Gary Gensler has implied that proof-of-stake tokens such as Ethereum should be regulated as securities. He has also suggested that crypto firms should seek professional guidance to ensure compliance with regulations. This follows increasing regulatory scrutiny of crypto projects and the heated debates about whether or not Ether can be considered a security. Overall, Gary Gensler's comments suggest that POS tokens, such as Ethereum, should be regulated as securities, which could bring more regulatory scrutiny to the sector. It is important to note, however, that the SEC head did not offer his opinion on any specific token and refused to comment on Ethereum in particular. German special agents arrested Coder 420 in 2019 for developing the dark web exchange Wall Street Market. The exchange facilitated roughly €50 million in sales between October 2016 and April 2019. At the time of his arrest, Coder 420 had 1,000 bitcoins worth $5.5 million. This article is a thorough and informative overview of the 2019 arrest of Coder 420, the developer of Wall Street Market. It concisely outlines the details of the arrest and the scale of the dark web exchange at its peak. The article presents a compelling account of the events that occurred. The highly anticipated Ethereum Shanghai hard fork has been officially set for April 12, 2021. The transition to proof-of-stake consensus is a significant milestone for the Ethereum network. It replaces miners for validators and introduces ETH staking. The transition could have regulatory implications for ETH and the crypto space. US SEC Chairman Gary Gensler suggesting that proof-of-stake coins might be securities. This article provides a thorough overview of the upcoming Shanghai hard fork on April 12, which is set to complete the Ethereum network's transition to proof-of-stake. It is important to note that the transition to POS could have regulatory implications, as the United States Securities and Exchange Commission Chairman Gary Gensler has suggested that ETH may now fall under the regulator's radar. It is also interesting to note that validators will be able to receive rewards payments automatically at periodic intervals, and that Ethereum's roadmap has several updates coming after Shanghai, known as the Surge, Verge, Purge and Splurge. All in all, this is an important milestone for the Ethereum network and the crypto space.